All right, everything's being recorded. All right, perfect. Welcome. This is going to be a simulation session, and we will try to simulate gold. And the way we're going to simulate gold is going to be, we will be simulating it based on the higher time frames, like the 4-hour time frames, and then we're going to be jumping down to the smaller time frames to kind of like study, like, market structure and price action, and like, how price moves with those things over there. Also, try to keep your questions to a minimum. Actually, don't ask any questions at all unless it's something that's not covered, because I can guarantee you every question is going to be answered. I mean, mostly every question is going to be answered without even asking them. So if something's left out, then you can ask it. But for the most part, if a question pops up in your mind, wait for like 5-10 minutes. If it's not answered, go ahead, ask it. All right. So let's start with let's go with 2019. Let's go with 2019. We're going to go with 2020, December 2020. Date's going to be 30th December. And let's start this from August 1st. Okay. And the dates we want, we need 10 dates over here. All right. So we got 10 dates over here. We got some 2020, October 2020. Is it possible to change the color of the background into another color? I mean, sometimes it's hard to recognize when the bullish candle. No, I think the bullish candles are white and the bearish candles are black. So I don't know. Yeah. All right. So we'll try to fix that. All right. So I got September, March, May, July. Let's go with July. 19th July 2020. Yeah, let's go with 19th July 2020. Okay, so we're going to go over here and we're going to try to download gold data. We're going to go to gold and we're going to update this. All right, so we're going to wait while it gets updated. Nineteenth July. All right, perfect. We're going to update the news data here too. Perfect. Perfect. So now we're going to start on. We're going to select gold. Go to, what was it? This date was 2020, 19th July. 2020, 19th July. So we're going to go to 2020, July 19th. We're going to use the US dollar. We're going to start with, let's start with 10,000. Yeah, actually, let's start with 7,000. This is my first top-up count, 7,000. New York close, lot size, whatever. Leverage is going to be, let's do like 1 to 200. Spread, let's do a fixed spread. Fixed spread of, see, this is something confusing because if we go with, actually, like, you know what? It's okay. We're going to go with real variable spread, but that spread is also kind of like different, right? So we're going to go with fixed spread, 10 points, 100 points. Let's go with 150, 300, 250, 250 points, 2.5 pips. Commission per lot, whatever. Initial history on charts, we're going to see almost like, let's go with 150. 150 days back. Start simulation. Okay, now we're going to load up our charts over here. Load up the weekly chart. Slowly we're going to load up all the charts over here. We're going to load up the daily, the 4-hour, 1 hour, 30 minute. That's all what we need, right? Because we're going to be breaking down the 4-hour. So we're going to be visualizing the 4-hour and then initiating trades based on the 1 hour and 30 minute. That's what we're going to be. The whole simulation is going to be on gold. Yes, it's going to be on gold. We're going to do 15 minute here as well. So 15 minute, this, and this. There we go. All right, so we're going to get our naked charts over here. Go to the daily here. Get our naked chart. Go to the 4-hour. Get our naked chart. Go to the 1 hour. 30 minute. 15 minute. All right, beautiful. Perfect. Okay, perfect. So let's start with the weekly. Let's start with the daily. Okay, so what we want to do is we want to go towards so we're going to start with the 4 hour candle that starts with the London session, right? So that's what we're going to do. We're going to go towards the 4 hour that starts with the London session. Actually, what else I want to do is I want to kind of like see where the spread is going to be. Okay, spread is fine over here. Go to the 1 hour time frame. Go to its properties. Go to show ask line. Okay, yeah, we're good. We're good over here. All right, awesome. So now we're going to continue on, and we're going to continue on with the next 4 hour candle. So if you look at the time here, right? So whenever you start simulation on gold, you need to look at the time. And I'm going to explain this, and I think if people can make notes on this, it's going to be very important. So if you look at the time, this was New York closed, and if you see the time 100 hours, this is 6 p.m. Eastern, right? It's very important. 6 p.m. Eastern. This means, so if we go by 1 hour, this is 7 p.m. Eastern, 7, 8, 9, 10, 11, 12, 1. 1 a.m. Eastern at this point right over here. And if you look on the 4 hour time frame, this is the start of the new 4 hour candle at this point, right? This is the start of the new 4 hour candle. So now what we got to identify is we got to identify that, okay, where can price move at this point? So now we're going to start to kind of like break this down on a technical level, because this is the start of the London session here as well. So let's take a look at the weekly here. So weekly is obviously pumping bullish over here. Weekly candle is like, it's about to go bullish. You can see like we had a bullish candle. So now we got to break this down in a daily time frame and see if we can really get those confirmations for price to continue going up or not. So looking at the daily time frame, what we can see at this point is that the daily is also ranging here. So let's just scale fix this a little bit, because now whenever you're looking at a chart, you're trying to identify on every time frame where you have the most recent support and where you have the most recent resistance. So first we're going to get these things in over here. We're going to get charts in over here. We're going to get line studies here. Perfect. So this is our resistance right over here, around 18, 1810. And we also have our support down over here. And if you do break above this area, can we see anything to the left hand side? No, we can't see anything to the left hand side. So the only thing we can identify here where price may move into is basically this high right over here, which is like 79 pips away. Right, so that could be our target for price to continue on. So at this point, what we want to do is we want to take a look at this on the 4 hour time frame, and we want to see, does this actually make sense on the 4 hour time frame for price to continue moving bullish or not. So let's take a look on the 4 hour now. So 4 hour here as well, we can see is now we need to kind of like readjust our resistance, which is going to be somewhere down over here. And if we break above this area, we have this wick to fill 26 pips away. And if we continue moving up, then we can possibly continue up to this wick and then up to this wick right over here as well. And also, but we look at this 4 hour candle that closed with no wick on the top. So whenever a candle closes with no wick on the top, that basically means that there is less volume for price to go up, right? Because the price didn't even make a top wick at this point. Because normally whenever price makes a top wick, this means there's a range for the next candle to continue moving up, right? So when there's no top wick, also we got resistance here to the left hand side. So this is where price is probably going to have some sort of an issue for it to continue moving bullish, right? So what we need to identify is that on the smaller time frame, if we can see some sort of a support, right? Because here's our bias. Our bias on the daily is obviously bullish, because if you look at the trend is coming from the bottom left to the top right, bullish trend, but we got this resistance here at the same time. If you look on the 4 hour time frame, obviously we're also bullish, but we need a break above this area. Now let's drop down to the 1 hour time frame here. So what we want to do is we want to adjust this resistance on the 1 hour time frame, because right now you can see how this resistance is overlapping the candles on the 4 hour time frame, right? So we need to adjust this area based on the 1 hour time frame, and I think we can do something like this. So probably we're going to remove this, we're going to zoom back in, and we're going to readjust it right over here, right? Makes sense? So we got this resistance right here. And if price continues going up, this is like a 20 pip range. If we break above this area, then we got a higher range to continue up to this point over here. Now, what's going to be our stops, right? It's really important to kind of read what the candles are doing here, right? So we had bullish candles, we had one bearish candle, and now we have this bullish 4 hour candle, right? Now, I just want to know this. If price is going to continue moving up, where can we have our stops based on a 4 hour time frame? can we have our stops below this zone, or would it be better to have our stops below this 4-hour wick right over here at the bottom? Below the wick, right? But we need confirmations on the smaller time frames here at this point. So now we have to wait for the 1 hour time frame, because we are creating some sort of a support over here, but we need some sort of a, like, confirmation that price is going to continue moving bullish. So that's what we're going to wait for over here now. So let's drop down to the 30-minute here for a little bit, and let's see what's going on. So let's clone this over to the 30-minute time frame, and let's see what's happening here. So first we need to remove this big zone. Remove it like this. Zoom in, and perfect. So we got our stage set over here, and let's see if we can get some sort of a buying confirmation here for price to continue up. Now what we're going to do here is we're going to try to tackle this candle closing with no top wick, right? And I think the best way to do that is first, so whenever you have a candle that's closing with no top wick, let's say like this, right? And price is moving up at this point. Let's say you have candles and candles are moving up. What's going to happen is that maybe the next candle, it may start creating a wick to the bottom side. And whenever price makes a wick to the bottom side, and when it starts to break above the high, that's the point where you can have some sort of an impulse entry, right? Because whenever you have a candle closing with no top wick and the next candle starts to go up, there's no impulse entries at that point, right? So that's why it's really important. Some people are saying they're lagging. I think it's something to do with the internet connection, but I think it's fine here for most people here, right? So you need first candles to come down, create a top wick, and once it starts breaking the high, then you can have some sort of an impulse entry. So that's where we can start looking for buys. So at this point, I think there are two things we can identify here, is that if we start breaking below this low 1807, then there's a probability price can continue down to fill this wick, and then eventually, like, we can maybe correct this move up, right? And then we got a support area right down over here where price can move into. So now we're identifying what will make price go down. A break of this area will make price go down, but a break, if confirmation of price breaking this high would make price go up. So that's something we're going to look at right now. So let's just see what happens over here. So this is the start of the new 4-hour candle. This is start before the London session here as well. So at this point, there's no buying confirmation because price is just wherever it is at this point. Let's take a look on the 30-minute time frame here as well. 30 minutes still bullish. So there's no buys at this point. Even though we can take risky buys, but the candle closed with no top wick. So our rules say that whenever candle closes with no top wick, we have to wait. So that's what we're going to do at this point. We will wait a little bit, and then we can see if we can kind of take a trade within this area or not. So this is pre-London. This is about 2 hours before London opens. So see right here, we're making a lower wick over here, which is pretty good. But if we start breaking above the high, then that's going to be a much better confirmation for price to start moving up at this point. Because if our bias is bullish, then it should basically do that. All right, perfect. Let's take a look on the 30-minute time frame. We're moving up over here, looking at the 4-hour time frame. It also looks pretty bullish. What I want to do is I want to scale fix this and move up over here. So the only reason we'd be executing a buy at this point is because the 1-hour candle, it came down to create a lower wick, and once it came down to create a lower wick, there's a higher probability for the next candle to now, if it breaks its own high, there's a high probability for it to continue moving bullish. And that's the only reason we're going to be executing a buy at this point, because number one, our daily is ranging where it's bullish, 4-hour is bullish, weekly is also bullish, and we're getting 1-hour candle closing with this very, very strong body bullish, right? And we're about to move into the second half of the 1-hour candle. So that's the only reason we'll be executing a buy at this point on gold, for price to continue moving up. So what we're going to do is we will risk around, what's going to be our risk? 1%. 1% is going to be risk over here. Stop's going to be around 22 pips, and almost like the same area we're targeting up over there. So let's do this over here. It's going to be 23. We're going to set a buy position. Looking at the 4-hour time frame, looks pretty good. 1-hour time frame also looks good. Anticipating price to continue up. We're going to secure positions, and then we're going to leave the rest running. All right, so now this is the second half of the 1 hour candle, right? So now look, this is very important. The previous 1 hour candle closed with no top wick. The first half of the 1 hour candle created a bottom wick, right? If it created the bottom wick, which means it has now created a higher low, which is higher than the previous low, and now there's a higher probability for the second half of the 1 hour candle to continue moving bullish, right? So then it makes sense at this time to kind of like execute a buy and really anticipate price to continue moving up at this point. Let's take a look at the trades over here now. So we're about 3 pips, 4 pips, still pretty good. The 1 hour candle is about to close. The 30-minute candle is still open over here. You can see this 30-minute candle is moving up. So we're only visualizing the 4-hour time frame, right? Because if we zoom in over here, what we can see is that this is a resistance formed on the 4-hour right over here, right? And if we get a 4-hour candle closing above this resistance, there's a higher probability for the next 4-hour candle to continue moving up in this range, right? And the reason why it could be a delicate situation is because we're actually counting on the 4-hour candle to continue moving bullish above this area right over here. The 1-hour candle is also about to close, so also remember this, right? We're taking these trades based on the 4-hour time frame, but we're executing them on the 1-hour time frame. We're visualizing the 4-hour, but we're trading this based on the 1 hour. So it's going to take a couple of hours. So this simulation is on a high time frame, it's based on basically high time frames over here. So we look at the 1 hour. 1 hour is still bullish, which is pretty good. Now what we need to see this 1 hour candle to respect the low of the previous 1 hour candle. If it breaks the low, then we'll be able to close partials. Okay, there we go. Let me just bring up my marker over here. So we're going to close 50% at this point. And once it starts moving bullish, we're going to look to add our 50% back. So we're not looking at the 30-minute, we're only looking at the 1 hour time frame, and we're looking at the 4 hour, because remember, this is based on the higher time frames. Let's speed it up here a little bit. So we're slowly moving into London Open. Now, since once this candle starts breaking the high of the previous candle, we cannot add a position back because our resistance is right over here at this point, right? So we need more stronger confirmations to add positions back. So we're slowly going to move into London Open here. We got 30 minutes left if you can look at the time. This candle is about to close, so we're reaching resistance at this point. We're not securing over here because we're waiting for the 4-hour candle to close, right? We're waiting for the 4-hour candle to close. We can see right over here too, 1-hour candle is respecting the lows of the previous 1-hour candle. Let's take a look on the 4-hour here. 4-hour is still pretty good, right? This is only based on the 4-hour time frames. Again, we're not looking at 1-hour time frame, not looking at 30-minute time frame. Our targets are based on the 4-hour, which is at 1811. That's what we're targeting at this point. Now, the reason why we're not securing more positions is because we already closed 50%, right? So when you close 50%, when you secure some positions at this point, you're leaving the rest running. Nice. So we're coming up towards 1811, which is pretty good right over here. Gonna close around 80% at this point over here. And now we're gonna leave the rest running at this point. We reached target, gonna put stops at break even, and that's it. Now this is the start. Now this is the start of the new 4-hour candle right now. Right? If you look at the time, this is the start of a new 4-hour candle. We've reached a very, very strong resistance at this point. And if you look on the 1-hour time frame, you can see how choppy the 1 hour was, right? And you can also see how deep of a liquidity grab this 1-hour candle made, but the overall 4-hour, it still continued to push bullish. And that's what we were looking for at that point. Previous 4-hour wick is longer than the body, so it might push up. Yes. And that was the case over here, where price is pushing bullish, and we still have a runner. And as price is continuing up, we're looking at these zones to get tapped into. Nice, perfect. See, so at this point, I think it's going to be a good idea to kind of like close everything and call that, like, you know, one trade at this point, because we really reached that target right over here. So this was only based on the 4-hour, and you can see how we executed. We executed based on the smaller time frames. On the 1-hour time frame, we waited for the 1-hour candle to create a top wick, and then when it started to break the high, that's when we executed a buy. We also kind of like managed our risk as price came down, broke the low. We managed the risk, and we kept the rest running. You know, and also our stop loss was based on the previous 1-hour candle, where you can see that no candles came down to tap that out. And yeah, I think that was a very well executed trade at that point, where price is now, like, you know, really continuing bullish over here. So we're moving into, like, you know, so now the new 4-hour candle is going to start over here with the New York session right here. See, now this is the new 4-hour candle starting at this point. 4-hour candle is also closing below the zone over here. I mean, that was I think that was a pretty good trade based from the London session moving into the New York session, right? That's what we're looking at. We're looking at 4-hour candles creating moves from pre-London moving all the way into New York session. So what we're going to do now is, now we're going to move on to the next day over here, and we're going to see if we can like, you know, try to replicate the same scenario in the next day. So okay, let's forward this. All right, so 3, this is 7, 8. All right, so 8, this is 1 a.m. Eastern. How was the profit due to closing 50%? It was pretty low, you know, because we risked around 1%. So when we closed 50%, we closed majority of our position, right? So you can see, like, you know, 1% risk, so we got around, like, you know, 0.3% win from that trade. So okay, so this is pre-London at this point. This is 1 a.m. Eastern. This is 2 hours before London open, and this is also the start of the new 4-hour candle, right? So let's take a look at the daily time frame here. So we can see how daily candle has broken above this resistance at this point, right? We've broken above this resistance, and what's the bias over here? What do you guys think is the bias at this point over here? Bullish. Perfect. Bullish, right? Bullish bias over here. Looking at the 4-hour time frame, it's very easy to look at the 4-hour time frame and also say, okay, like, you know what? 4-hour candles are basically closing above this resistance, close above this resistance, this candle close above over here. And you can see how, like, you know, this was London session, this was New York session, this was closer to London close, and then we moved into Asian session, right? And you can see how in the Asian session there was no volume at all, because after this candle was formed, you had another Asian session 4-hour candle, no volume, so no big candles, right? And then you have another bullish candle forming at the close of the Asian session, and slowly we're moving into pre-London right now. So since there's going to be a lot of volume in pre-London, what you need to do is you need to look at this scenario and close your eyes and kind of like ask yourself, okay, what's the probability that the volume in pre-London will move the 4-hour candle bullish, right? Versus what's the probability that the volume in pre-London will move the 4-hour candle bearish? That's something we need to ask ourselves every time we're looking for a potential trade, right? So just by looking at this, I think there's a very high probability that the volume from London session can move this price bullish. And what we're going to do at this point is we're not going to look at the 1-hour time frame, because we're only visualizing it on the 4-hour time frame, right? So if we look at this right over here, so let's say if someone takes a buy and our stops are below this, how many pips is this? 29, 30 pips below the 4-hour candle, there's a high probability we can continue moving bullish. That's something what I can see here from the get-go. Now let's take a look on the 1-hour time frame. And looking at the 1 hour, obviously we have some sort of a rejection over here. But I mean, I think if we only take this trade on the 4-hour time frame, it looks much more cleaner, and then we can kind of like manage our risk based on the 1-hour time frame. It's kind of like when we're scalping and we're executing trades based on the 30-minute time frame, but we're looking at the 15-minute or the 5-minute to manage risk. Make sense? Or at the same time, when we're executing on the 1-hour time frame and we're managing risk on the 30-minute or the 15-minute. So that's what we're going to do over here. We're taking the trade based on the daily going bullish and the 4-hour going bullish, but we're going to manage the risk based on the 1-hour or the 30-minute. So I think it's going to be a pretty good idea to execute a buy over here, having like 30 pip stop, 1% risk, and stop is going to be below the 4-hour time frame, and we're anticipating this 4-hour candle to continue moving bullish. That's what we can basically see from price action at this point. So now when we drop down to the 1-hour time frame, we can see that now all we need this 1-hour candle not to break below this support, because if price starts breaking below the support, then we have to manage our risk. Because if price comes below this area, then we can say, okay, you know what, at this time we need to kind of like close 50% or do something like that. Oh, Nissan camera's on. All right, so we're going to focus on this over here. So we can see how the 1-hour has really passed over here. Looking at the 30-minute time frame, we're creating this minor support, which is pretty good. This trade is based on the 4-hour time frame. Again, remember, it's based on the 4-hour time frame. So we're letting the 1-hour candles close. The 1-hour candles are going to close in about 3 minutes, 4 minutes. There we go. This is now 2 a.m. Eastern. 1-hour candle is closing bullish. It's pretty good. What we're going to try to do over here is we're going to try to add some risk, right? And if we get a break above, let's say 1819, we're going to try to see if we can add risk to the trade, because then that would mean is that the 4-hour candle is now will start to push up, right? Because if this is going to be a volume time, you need to understand that whenever there's going to be volume in the market, you'll get pretty big candles, right? So that's what we're anticipating, bigger candles here, because we're moving into a high volume time, which is basically pre-London. And we're moving closer to London Open over here too. So we can see here 1-hour candle is coming down over here as we start to break up. Oh, see right over here? Right over here, we would be entering a buy at 1820 and keeping our stops below this area right over here. So if it comes back up again, we're going to add a risk at that point. I mean, should have added it, right? But we got late. Price moved too fast. All right, perfect, right over there. So we're going to add our risk right over here. And we're not going to add 1%, because if we add 1%, then we're going to have 2% open. So we're going to add 0.5%. Oh, 0.5%. Our stops is going to be below this 1-hour candle, 33 pips away. 33 pips away, because it's gold, right? It's gold. So that's what we're doing at this point. And once we start breaking the high, then we're going to start to kind of like what's the word? Secure positions. This trade was executed on the 4-hour. Even the previous 1-hour was bearish close. Yes, it was anticipated on the 4-hour time frame. Right here, it was anticipated. It was taken on the 4-hour, but we said we're going to manage risk on the 1-hour time frame. So if we look here, our first position is about 36 pips in profit. So we're going to close majority of this position over here, close 80%, and move stops to break even. Where is it? I think it was this one right over here. So move stops to break even. Beautiful. And the rest position is still open at this point. Oh wow, this thing is still moving over here. So now we're going to close our partials on the new one. So if you look at the new one we entered, our new position, this is the risk we added, right? We added this risk in the anticipation that price is going to continue moving bullish. How far? We cannot look to the left-hand side. There's no history to the left-hand side. So we're just going off of the pips we are in at this point. So we can close 80% over here as well. And we're going to basically put stops at break even here. Probably going to move these stops up a little bit and leave the rest running at this point. So this trade was taken based on the 4-hour time frame. And we said that we will manage this trade based on the smaller time frames. But the first trade was executed in a lower time frame, yes, because the 4-hour time frame closed with the top wick. So there are different variations you have to understand, right? So if you're making notes, you're going to understand that. But if you're not making notes, it's going to be very difficult, right? So if you remember, we're going to recap the first trade. So this is London Open at this point. This 4-hour candle closed with no wick, so we needed confirmations on the smaller time frame, right? This candle, however, closed with a wick on the top, and it's also closed bullish. So what you can do is you can rewatch the recording, and you can see the confluences we had. So perfect, yeah. So we have two positions running over here. They're both in profits, and we're slowly going to move into pre New York at this point right now. So this is where your runners, they keep on running. This is how you move into an intraday swing, right? If price continues moving up, moves up. But let's take a look on the smaller time frames here. So you can see over here how the 1-hour candles are closing bullish. They're creating this minor support. So now this is where you start to visualize the 4-hour time frames, right? So if we're looking at this scenario over here and we're looking at creating a support on a 1-hour time frame, as long as we keep respecting the support, we can anticipate the next 4-hour candles to continue moving bullish, right? And that bullish move may result in a overall New York session moving up, because now slowly we're moving into pre-New York over here from the London session. So let's take a look on the 30-minute time frame. Now we're creating the support on 30-minute time frame. So see how as we move down to the smaller time frames, things start to get a little bit more complicated when it comes to market structure. So this is why when you're trading based on the 4-hour, you're actually waiting hours for candles to form. Even though in the simulation it seems like minutes, but you're actually waiting hours for candles to form. And whenever you're trading based on the 4-hour or the 1-hour, you don't have to look at the 30-minute, you don't have to look at the 15-minute, because these smaller time frames will confuse you a lot. Look at this, right? Look at these moves down, moves up. So you're not looking at the smaller time frames if you're trading on the 4-hour time frame. So there's a big difference, right? So we can see how the 1-hour candle has closed bullish. We have a weak bullish close. So we want to break this high. Oh yeah, there we go. We want to break this high for it to continue. Probably gonna close. Let's start closing some positions here. As there is no history on the left, would you trail stop loss below the 1-hour support? Yes. Yes, that's what we're going to do below the 1-hour supports right over here. Below the 1-hour supports and below the 4-hour lows over here. So below the 4-hour lows, right? Just like what we do on the 30-minute time frame. No need to look at the news? Probably not. Sometimes you can look at the news, right? Because in the higher time frames, the 4-hour time frame, the daily time frame, all the news events are going to be, they're just going to be little speed bumps. So we're moving into New York Open at this point over here. So this is New York Open here, and you can see how, wow, man, we're lucky we're getting a good simulation session over here where price is just trending. Normally it doesn't happen this way. But, okay, so probably going to close this trade right over here. So you can see we're about oh, wow, man, gold is really pumping over here. So we're going to close this whole area at this point. And so we got around like 2.5% so far, man. This thing is still going. See how much volume now New York session is bringing in. The most important thing to notice is that there was no volume at this point over here. Let me just bring that point over here. At this point right over here, because this was the Asian session. Asian session has no volume, and you can see how the candle closed bigger bullish candle than the previous one. We entered the trade right over here anticipating volume in pre-London session, and then pre-London happened, London Open happened, and then boom, New York session and New York session and what's the word, London session happened. So that's why we're getting a bigger candle here on the 4-hour time frame. Any news making it move so much? No, not really. I mean, if you look at the time, this is July 2021. So this is like basically when the lockdowns were kind of like, being relaxed, and Trump was here and there. And yeah, there were a lot of things happening at that point. All right, so this is start of the new 4-hour candle. So let's remove all these arrows and let's move on to the next pre London session over here. So we got two trades, two wins. One was a smaller win, one was a bigger win over here. You know, Monday was smaller win, Tuesday was bigger win. The only reason we didn't held the Monday because candles closed at this resistance, right? So that's why we closed everything. And then we waited for the next day, and ironically, we got a pretty big win over here on Tuesday. So now let's move on to the Wednesday here now. Okay, so this is 5. Oh wow, oh my God, man, this thing continued moving over here. Crazy, crazy things happening. When there's no history to the left, would you go about creating a target? Targets are going to be created based on stop losses. So we're going to talk about that right now, if we get that chance over here. All right, so this is pre-London right now, right? This is pre-London. Price has moved up. We're supposedly we're trying to come down here a little bit. Let's take a look at the daily over here. Daily has also moved up a little bit over here. Looking at the weekly time frame, weekly is also moving bullish at this point. Okay, weekly is moving bullish. Daily is moving bullish. We have the 4 hour. This is the start of the new 4-hour candle 2 hours before London open. And now what we need to identify is that are we going to continue moving up, or are we going to have some sort of a retracement for price to come down? That's something we need to look at right now. So what we're going to do is we're going to go towards the 1 hour time frame, and we're going to see, okay, so basically price went up, created a high, came down, and it seems like it may be creating some sort of a support for price to continue moving up, right? So at this point, I think what we need is some sort of support form, because if we can see some sort of a support formed, right? Now this is the thing. Whenever you have really bullish movements over here, we need some sort of a support. If price can create a support, and if you break that support, then there's a very high probability we can continue moving up, moving down, right? But if we respect that support, then there's a very high probability we can continue moving up. And respecting the support is going to mean if we get a bullish candle close over here, then we can move up. But if we get a bearish candle breaking support, then obviously, like, we can continue moving down. So at this point, there are no buys, and at this point, there are no sells at all, right? But the only thing what I can basically see is that if we get a candle, let me scale fix that over here. So if we get a candle breaking the high over here of the previous bearish candle, I think there's a very high probability we can continue up in this range. So let's look at that on the 30-minute time frame. Okay, 30-minute candle is also closing bullish over here, but we need confirmations on the 1 hour time frame. So this is a setup which I like to trade all the time, and this setup is called retesting the high, right? And it happens like this. Price goes up, creates a high, retraces, creates a support, and once it creates a support, there's a higher probability for price to continue up to retest this high right over here. And this move going up is your trading move over here. But now in this case, we need confirmation. Then what confirmations we need is now obviously we have this wick to fill, we have this resistance over here, we're getting a 30-minute candle closing bullish, right? Now, since we're trading based on the 4-hour time frame and we're executing on the 1 hour time frame, we need more confirmations on the 1 hour time frame to take a buy position. And I think a better confirmation is going to be, even though 30-minute candle is closing bullish, if we can get a 1 hour candle to break above the high of the previous bearish candle to execute a buy for price to continue up. Do these setups work better on the high time frame? These setups, they work on all time frames. 30-minute time frame, 1 hour time frame, 4-hour time frame, on all time frames, right? When we do scalping, people ask, hey, do these setups work on the high time frame? Yes, they do. Now we're doing swing trading, they also work on the lower time frame. What times is the 4-hour open and close? This is the 4-hour open right now. This is the new 4-hour opening at this point right over here. Right, and I'm going to explain this one thing over here. I think it's going to be a little bit complicated. And when you please ask questions publicly. Don't ask questions directly because it's important for other people to view the questions too. So now, since the new 4-hour candles are going to start over here, we know the anatomy of a candle, right? The anatomy of a candle is whenever a new candle forms, it's going to create a lower wick, and then it's going to create a top wick, right? We all know this. But looking at this new 4-hour candle that's going to start, if we start breaking above the high, then there's probably not going to be a lower wick on the 4-hour time frame, right? But if we start breaking below this area, then 4-hour candle may start to move down. So that's what we're going to anticipate right over here, right? So we see the 1-hour candle. It's right down over here. So slowly it's coming up to break the high right here. If you can see right here, this is what we were anticipating, right? Now, when we look at the time, even though the simulation ran for about 10 seconds, look at the time right over here. 30 minutes have passed, right? 30 minutes have passed. This 1 hour candle in the first 30 minutes, this is what it created right over here, right? It created a bullish 30-minute candle. Also, it's creating a support for price to continue moving bullish. If you look at the 1 hour time frame here, now it's breaking above the high, and this is what we were talking about. As it starts to break the high, there's a high probability it can continue up to fill this range. And this is where we're going to execute a buy position over here. Since it's breaking the high in the first half of the 1 hour candle, we can take an impulse entry, keeping the stops below the current 1 hour candle, right? And we're going to anticipate it to continue moving bullish. So stops are going to be around 23 pips, 24, 240. We're going to use 1% risk over here. We take a buy position, and we're going to anticipate price to continue bullish based on the 1 hour time frame, and that will now translate into the 4 hour time frame to continue moving bullish, right? Even though it seems like it moved up a lot, but on the 1 hour time frame, it makes sense for market structure to continue up to at least, you know, like this area 1860. So let me just mark this down right over here, this area right over here, right? Very simple market structure here, extremely simple. If it works out, good. If it doesn't work out, not good. Because on Friday, I executed the same trade on pound yen. It didn't work out. Right. So the 1 hour candle is about to close at this point. We're about 14, 20 pips up over here, 21 pips up over here. We're going to close partial positions, close around 80% at this time, and leave the rest running at break even. Because we're approaching resistance, plus we also secured around 121. Nice. See, now we've reached this resistance, and this is the point where we're going to close another partial positions over here, 80%, and leave the rest running. Because even though on the 4 hour, it seems like we can fill the wick, but on the 1 hour time frame, we're encountering a resistance over here. So it's not apparent that we're going to break this resistance or not unless we break this resistance, right? So it's very important because we cannot hold our full positions at a resistance. Wow, so I think that was a pretty good indication there for us to close right at resistance because there was no confirmation that we're going to break this resistance or not, right? So that's why price came down. We secured positions, left the rest running, and yeah, I think it went really well here so far. Would you say you would trade GJ with the same kind of methods? I trade GJ with the same kind of methods all the time. There's no rocket science. Right, price came down, create support, move up, impulse entry, and now we're at this resistance up over here. This is it. Now we have this resistance on the 1 hour time frame. On the 4 hour time frame, this is what it looks like at this point here now. So unless we get a break above this, so this is where we'd be looking at the 1 hour confirmation to break above this area to take a trade, right? So there are different variations you need to look at based on the 4 hour and 1 hour. Sometimes you can get confirmations on the 4 hour time frames, but if we don't get confirmations on the 4 hour time frames, then we got to take a look at the smaller time frames, like the 1 hour or 30 minutes. So slowly we're moving into London Open now in 20 minutes. In real scenario, would you have hold for 20 pips or would you have closed partials for 10 to 12 pips? If I'm trading gold, I'm holding it for like 15, 20, 25 pips. You know, because gold gives you that much of a range. So if you measure this range, this is like a 59, 60 pip range. You know, so normally pound yen doesn't have these ranges on a 1 hour time frame, but gold has these ranges on a 1 hour time frame. So now at the same time, we're creating the support over here. And if we break the support, then there's a high probability for price to continue down. So we need to wait for these candles to kind of like close, right? Now, another thing I want to point out is now someone might be thinking, well, we have the support, right? And this candle is breaking support. Why can't we take an impulse sell for price to continue down? The reason why we can't take an impulse sell over here, because look at the time, right? There are 3 minutes past for this 30-minute candle, right? In the first 3 minutes, the 30-minute candle broke support. So there's a very less probability it's going to continue moving down in the first 5 minutes. I've made these mistakes over and over again, and now I've learned not to make these mistakes again, right? If we're breaking the support in the first 3 minutes, it's probably a less probability it's going to go down. So maybe we'll have to wait for about like the next, 15, 10 minutes, or maybe we need to wait for this candle to close below support to take a sell. Because we don't know whether this is just coming down to make a wick or whether it's coming down to close below. Yeah, see right over there. And also now when we look at the time, we're closing on the 15-minute time frame here as well. I'm sorry it's moving too fast. Can't really help it. So let's go to the 15-minute time frame. Yeah, see, look at the previous 15-minute candle. It closed above support, right? If you look at the 30-minute candle, is still open at this point, and we're not sure whether it's going to close below support or it's going to close back above support. So we need to wait. If the candles close bearish below previous low, does that mean it's a good sell because candles to the left are clean? Yes. Yes, exactly. That's what it means. Then we can see the candle is about to close over here. See, that candle has closed bearish at this point, and since the candle is closing bearish here, I think this is going to be some sort of confirmation for price to continue down. But we need to look at the 4-hour time frame here now, right? So if we look on the 4-hour, what we can see is that this 4-hour candle is coming bearish here. Looking at the 1-hour time frame, we're also closing bearish. Looking at the 30-minute time frame, we're also bearish at this point, but we got this rejection. Now, when we look on the smaller time frame, do we want to take a sell over here, or should we wait? Let's see over here. If we can take a sell based on the previous time frame, it's going to be like a 29 pip stop loss over here. And if it's going to be a 29 pip stop, I think we need to wait for it to kind of like retrace up. And once it retraces up, creates a top wick, and then starts to go down, I think then we should start executing a sell. Yeah. Oh, I guess we got too late over here. Yeah, that would have made sense. If it didn't move too fast, would have executed right over here for price to continue down. So now since it has the clean candles over here, all it needs to do is cross below. Oh yeah, cross below this to continue down. So that was good. Who was that? Michael. Yeah, that was really good analysis there. Like once we start breaking below the lows, there's a high probability we can continue moving bearish. So this would have been a perfect indication for a counter trend trade, right? We closed below support, we waited for this candle to close and executing on the next candle to continue down. And if you look at the time, this is also a high volume time at this point right over here. But obviously, like, we're being a little bit risk averse at this time too. Nice, it's actually moving pretty nice over here. Pretty good. So we're slowly moving into the 4-hour candle. This is going to close. This 4-hour candle is going to come to a close, and then we're going to see whether we can, maybe take another trade here based on the 4-hour or not. So perfect. So 4-hour candle has closed over here, and we can see how the 4-hour candle has closed. It closed with no wick on the bottom, and as it's closing with no wick on the bottom, there's no telling when the next 4-hour candle is going to continue moving bearish or it's going to continue moving bullish. So at this point, we kind of have to wait at this point to see what's going to happen. So looking on the 1-hour time frame, it also, if we broke down, closed with no wick at the top, 30-minute time frame also at this time over here. Okay, but if we do create a support on the 1-hour time frame or the 30-minute time frame, I think that could be a pretty good indication for price to continue back bullish, right? Yeah, because then we're going to be following a trend. So let's wait over here. This is the start of the new 4-hour candle at this point. So we have to wait. We have to wait for some sort of a support to be formed. Because below this area, we have this support over here. And if we start creating a support at this point, then there's a very high probability for price to continue bullish. And that bullish move is going to be a correction of this bearish move below support. Yeah, so we at least need a 30-minute candle to close bullish. That's what we kind of need at this point. So we're going to wait for the 30-minute candle to close. Hopefully we close with the wick on the top. There we go. 30-minute candle has closed. 30-minute candle has closed, but the stop is around 52 pips and our target is around 41 pips. So this is a negative risk reward. So taking a buy over here is going to be not good over here. Why don't you look at the 5-minute? Is it because it's the weak confirmation? No, just as we explained in the start of this simulation, this is a higher time frame simulation here. We're only looking at the 4-hour, 1-hour, 30-minute. That's it. When you're trading based on a 4-hour time frame, 1-hour time frame, there's no need to look at the 5-minute. There's no need to look at the 15-minute, because if you look at the smaller time frame, you're just gonna. It's just this. This is too much mess over here, right? So that's the thing. So you need to choose what you're gonna do. Either you're gonna trade based on a higher time frame or lower time frame. So since this stop is gonna be way too big, we cannot execute a buy at this point because our risk is going to be 50 pips and profit is going to be like around 40 some pips. Negative risk reward at that point. So as we can see, 4-hour candle closed with no wick, so there's a high probability for it to 50-50 chance, and it's starting to continue back up over here. So we took one trade within this range. We just took one trade, and I think we missed out on this sell over here for price to continue down. So stops are going to be much bigger on the high time frame. Yes, high time frame stops are always going to be bigger. So now when we see right over here, this whole move, it becomes a fake out, right? Price came down, broke below, and this is sort of like being a fake out right over here. So let me just mark this up over here as well. Okay, so we created a support, right? Once we created a support, candle closed below support, came all the way down, and now we had this one candle closing back above support, right? So now if we're getting a candle closing back above support, there's a very high probability for the next candle to probably continue back up in this range, but we're not sure how far is it going to go back up in the range, right? So we got to take a look on the 4-hour time frame, and let's take a look at this scenario over here. Where's my 4-hour? Let's get this 4-hour over here. So we got 4-hour over here, and if that is a fake out, I think there's a very high probability we can possibly continue up to fill this wick. So this could be a fake out, right? So I think what we can do is we can maybe take a buy position, 0.5%, and keep our stops below this 1-hour candle and really anticipate it to continue moving bullish up to this area. Yeah, I think that could be a pretty good move. Would it have been a good idea to take a buy on a 30-minute break of the previous candle stop below? No, not really, because the stop was way too big. This was a 52 pip stop and our target was 42 pips. It was a negative risk reward. So now since we're moving back up in the range, there's a high probability for price to continue moving up. So that's something we'd be looking for a buy over here. So some people are saying they would also take this trade. That looks good. Perfect. So we got a 31 pip stop over here. We got a 0.5% risk. This is a fake out over here. So we're going to execute a buy and anticipate price to continue back up in this range. Around 1861, if we break above this area, perfect. If not, whatever. This 30-minute candle has just started. It's about to close over here as well. This is pre-New York now, right? And pre-New York has a lot of volume here as well. There we go. We're closing back above this range. The 30-minute candle has closed bullish. We're looking on the 4-hour time frame. 4-hour candle is also moving bullish over here. It's coming closer to a rejection area. Looking at the 1-hour time frame, we're also moving up to this resistance. So here's the thing. We broke above this support, and now there's a high probability for price to retest this resistance, and then there's a lower probability for it to break this resistance. So we're going to look to secure positions as it comes towards resistance at 1861. Since it's gold, so we're giving it a benefit of a doubt because it has a lot of volume whenever it's moving with clean market structure over here. So we're reaching 1861 at this point. Man, we're just lucky we're getting some pretty good moves, because this was a clean fake out, something we've looked at, something we've studied in the database, right? So this is where we're going to be closing around 80% of our position. Right over here, close 80%. Put stops at break even, and that's it. And now if we're breaking above that zone, it's breaking above that zone. Daily candle is also bullish at this point. Looks like a runner got stopped out. Yeah, it got stopped out. Really good analysis to close the trade. The fake out on the 4-hour, would that be liquidity grab on the daily? Yes, that would be a liquidity grab on the daily. Wow, what a move here on gold. So we took two trades over here. We took one trade pre-London, right, within this range. This was based on the 1-hour time frame here, breaking the high. And then we took another trade after this fake out for price to continue back up in the range, following the trend, because the trend was bullish at this point. All right, so let's move on to the next pre-London 4-hour candle, and let's see what surprises gold has in store for us. Oh wow, look at that. Moves pretty hard. Man, this thing is still moving up. Crazy. Okay, 6, 7, 8. So this is pre-London 4-hour time frame. So looking at the daily candle is retracing. Looking on the 4-hour, so now this is the new 4-hour candle about to start. And before this candle starts, what we're seeing is that now we're creating a resistance on the 4-hour time frame at pre-London, right? So, excuse me. This could maybe anticipate, I mean, we could anticipate for the next 4-hour candle to maybe wick up and then continue down to fill this wick, or maybe like retrace a little bit for this move up a little bit, but we're not sure what's going to happen. So we're gonna have a look at on the smaller time frames, and we're gonna see if that makes sense or not on the smaller time frames. So looking at the 1-hour time frame, what we can basically see over here is that we are creating a resistance right now, and at the same time we are also creating some sort of a support right over here as well. And what we're going to do is we're going to remove all these other analyses here, because these analyses become irrelevant. So now what we're going to do is we're going to try to anticipate where can price go based on the 1-hour time frame, because in the 4-hour time frame it seems like we can continue moving down, but we need that extra confirmation here, right? So we look on the 4-hour. 4-hour is obviously bearish. We can't take a sell, and the reason why we cannot take a sell is because on the 1-hour we got support right over here, right? That's why we basically cannot take a sell. Now let's study this 4-hour here. The only thing we can do on the 4-hour is that if the next 4-hour candle starts breaking the high of the previous 4-hour candle, then maybe we can take an impulse entry for price to continue moving bullish. That's something we can look at. Or for sells, we can look at if we start breaking below the support for price to essentially retrace to continue down to this area around 1860. I mean, how far is that? In this, oh nice, 53, 54 pip range. Or that's something we can look at, right? So I guess we'll have to wait, because right now we're in this range. This is like a 74 pip range. Let's take a look on the 30-minute time frame over here. Looking at the 30-minute time frame, yeah, we're also ranging here in the 30-minute time frame. We got resistance up over there. We got support over here. Yeah, there's nothing that we can see over here unless we break the support or we break this resistance, right? Perfect. So we got two scenarios. Either we break resistance to go up or we break support to go down. Simple analysis, because price is ranging. 4-hour, we can't execute on the 4-hour because, you know, obviously we have market structure on the 1-hour time frame. So we have to wait. We gotta wait. Either we break the highs or we break the lows. If we break the highs, we go up, follow the trend. If we break the lows, we go down and we kind of like retrace. So let's wait. 30-minute candle is also closed. 30-minute candle is closing bullish. Let me just scale fix this here a little bit, and let's take a look over here. So since the 30-minute candle is closing bullish, what we're looking at is that, is this enough range for price to continue? This is like a 20 pip range, and then the stop is going to be, yeah, we'll see. What I'm thinking is, if we break above this high, can we take a buy for price to continue up in this 20, you know, maybe like a 20 to 22 pip range or not? If our stop is going to be, I mean, if it breaks its own high and the stop is going to be around, like, you know, 18, 19 pips, it makes sense to take that trade. But if the stop is going to be bigger, then it makes no sense to take this buy. How big is the range to nearest support? Below this support, this is around, yeah, 36 pips. We can also take a look at that too. So if we break below this low, I guess we could take a small scalp for price to continue down, but if we break above this high, we can take a scalp for price to continue moving up. So we need a candle to actually close below to take a buy, or to take a sell. If a candle doesn't close below, then we cannot take a sell. Oh, 30-minute candle is ranging over here now. This is still pre-London, but we look on the 1 hour time frame. Okay, now this is also very important. This is something that we're gonna kind of like talk about the trade we took earlier, right? We're moving in pre-London session right now, right? And if we look at the candle themselves, this is where visualization and anticipation comes into play. We had Asian session, we had some sort of volume over here, and then we had low volume. Volume is increasing a little bit. We're moving into pre-London. So what's the probability that the pre-London is going to now have bigger candles, right? I think there's a very high probability pre-London can start to have bigger candles at this point. And since we're slowly moving bullish over here, the daily is bullish, 4 hour is bullish, even though the previous 4 hour candle is bearish, we're anticipating it to continue moving bullish, right? So what we're going to do is we're going to remove all the analysis over here, and we're going to start to anticipate this based on the 30-minute time frame. If we break above this high again, then we can anticipate the 1 hour candle to continue moving up. So that's something we're going to start to anticipate here. Okay, perfect. See, we're breaking above the high on the 30-minute time frame. Now, this is really important. Even though on the 1 hour candle, we're moving up in the first 3 minutes, right? This is very important. Even though on the 1 hour candle, we're moving up in the first 3 minutes, we're breaking above the highs on the 30-minute time frame. And 30-minute is a strong enough confirmation for price to continue up. So I still think this is a very high probability we can continue moving bullish because we're following the trend. Previously, we did not take a sell. I think it was right over here because we were breaking the lows in the first 3 minutes in the counter trend trade. That's why we did not take a sell over here in the first 3 minutes. But since we're following the trend on the higher time frames, we're breaking the highs on the 30-minute time frames, there's a higher probability for it to continue moving up. So that's why, for that reason, we're going to use a smaller risk over here, and we're going to place the stops around 20, 21 pips. We're using a smaller risk, 0.5%. But if we start breaking above this major resistance, then we're going to see if we can kind of like add a position to our trade or not. Nice. We're coming up to this resistance over here. Looking at the 1 hour time frame, we're also coming up over here. So at this point, we're going to close partial. So it's very simple. We're only following the trend and we're waiting for candles to print something that we've seen before. The previous trade we took was a fake out. The fake out on the 1 hour time frame. The trade previous to that, what we took was on the 4 hour time frame moving bullish. So we're always waiting for candles to print something we want, right? So at this point, we're going to close around 80%. And we're going to put stops at break even. And let's take a look on the 4 hour here. Now, see the 4 hour candle, right? We're breaking above this high now on the 4 hour time frame. And since we're breaking above the high, this is now a very high probability for price to continue up to fill this wick right over here. But we need some sort of a confirmation on the smaller time frame. And the kind of confirmation we need on a smaller time frame is that we need at least a 1 hour candle to close bullish or a 30-minute candle to close bullish so that we can have a decent stop loss, below this candle or whatever the case is, right? So we need that confirmation here. So I guess we're going to need a 30-minute candle to close with. So what's this? So trend-based impulses are still low, medium probability on first halves, but the higher than counter-trend impulse to clarify. Yes, but at the same time, you need to see it happen over and over and over again to kind of like create your own bias around that. So the 30-minute candle is about to close over here in about 10 simulation minutes. And since it's about to close, I think it's going to be a very good idea for price to continue moving bullish and the overall 4 hour to continue bullish. I mean, if you can get that close over here, it's going to be very nice. 2 minutes, 1 minute, and there we go. 30-minute candle has closed. Let's take a look on the 30-minute time frame. 30-minute candle has closed bullish. We're looking at the overall 4-hour time frame. It's closed bullish. Now, just by looking at this 4-hour, just let's forget about the 30-minute. Let's forget about the 1 hour. Just by looking at this 4-hour, what's the probability that this 4-hour candle is going to continue moving bullish? I think there's a 80%. Okay, we're getting 80%. So that means there's a high probability for the 4-hour candle to close bullish, because let's take a look at this, right? So if we look at trends, if we look at how trends move, right? Trends move, we make higher highs, we make lower lows, we make lower highs, we make lower highs, and then we make higher highs, right? So at this point, what's happening is this previous 4-hour candle closed bearish. It made a rejection right over here. And when this simulation started, or when this day started, we were anticipating 4-hour to make a top wick, come down to fill this lower wick over here, right? But in this case, what's happening is that we're having all candles moving bullish, and the most important thing is on the 4-hour time frame, we're getting is this candle is breaking the high of the previous 4-hour candle, which means there's a high probability it's going to start making a higher high now, right, after making a lower high. So I think this is going to be a pretty good indication to add a position to this trade, since we already have some percentage open. So what we're going to do is we're going to add a buy. We're going to have, I think the stop is going to be way too big. Look, yeah, I think the stop is going to be way too big. So what we're going to do actually is we're going to put our stop not below the 30-minute candle, but we're going to put our stop in the middle of this range, around 30 pips, right? And the reason why we're going to have it at 30 pips is because we're not expecting this 4-hour candle to continue all the way back down. If it's breaking the high, we're anticipating it to continue moving bullish without coming all the way back down to break the low of the 1-hour candle over here. Because you also have to understand, this is now the second half of the 1-hour candle starting. So if the first half is closing bullish, there's a very high probability that the second half will also close bullish, right? So yeah, so that's what we're going to execute over here. We're going to execute a buy, and we're going to let it run. We're going to anticipate the overall 4-hour candle to continue bullish, at least to fill this wick here to the left hand side, which is like 28 pips away. And we're going to anticipate the 30-minute candle to also continue bullish over here above this resistance, which is going to overall make the 1-hour candle go bullish. Why not wait for the lower time frame support, or wait on the 30-minute to break with stop loss below the current candle? Because we're taking this based on the 4-hour time frames. So we're at 1875, we're filling that wick right over there to the left hand side. This candle still can, now this is the London Open right now. This is the London Open right now, and price is closing above resistance. This is London Open. London Open has a lot of volume, and it's just very clear that London Open should continue pushing price bullish. There's overwhelming confluences with that. And if we look on the 4-hour time frame, we're also moving bullish at this point, which is also pretty good. Probably going to close partial, probably going to close this bigger position we have, and looks like we are kind of like retracing down. Now this is what we want. We don't want this candle to come back in the range. If this candle comes back in the range, that's when we're going to be closing partial positions. We have 15 pips. Is it a good idea to close partials on the added position? No, it's not, because we're taking it on the higher time frame. So at least we want 1-to-1 over here, right? Or at least we want 1-to-1, or we want price to kind of like break above this area at this point right over here. So now this is the close of the 30-minute candle. Looking at the 30-minute time frame, we're closing bearish, but we're closing with no wick at the bottom, and we're also closing above the support. If this candle starts breaking below this area now, then we're going to close partial positions. Other than that, we're going to leave the position open, right? Because we're already using a lower risk. We're using a 0.5% risk. So it's a very delicate situation when you're managing risk at this point. So this is the second half of the London Open hour over here. Looking at the 4-hour time frame, we're still very bullish over here. Looking at the 1-hour time frame, we're also creating that lower wick to potentially continue moving bullish. It's just that these wicks are maybe causing some problems here. Once we break this area, I think we can continue moving up. but we need confirmation on the 30-minute here to close bullish too. If we close bullish on the 30-minute, I think we're still good to go for price to continue up. Nice, perfect. So right over here, we're going to close partial positions because we're breaking above those highs. We're going to close around 80%. Put the rest at break even and let the rest run. See, if we would have had 1% risk open, with this 30-minute candle closing bearish, we would have closed 50% because we were already using a smaller risk, so there was no need to close 50% because the risk was already pretty small. So now our stops are at break even, we've secured positions, and I mean, if it comes down to stop us out for pre-New York, so be it, but if it continues moving for pre-New York, then I think that's also a pretty good idea. Oh, nice. We're about like 5% over it. So I think at this point, we're going to secure positions, close everything, and yeah, let the rest run. How often would you check the charts to manage trade? Every hour, every hour, every 30 minutes. Oh, wow, this is still moving over here. Moved around like 38 more pips after we closed. Nice one. 56, 60 pips. Man, this is crazy. Don't even remember these days. So after we broke above that resistance, it just continued on around like 780 pips. Wow, insane. So we're slowly moving into pre-New York. This 4-hour candle is also coming down to a close. And since this 4-hour candle is going to come to a close, we're going to see if we can kind of like do some more things over here or not. So let's take a look on the 4-hour now. So the 4-hour candle has closed. This is the start of the new 4-hour candle now. And what we need to identify is we need to identify where can price start moving at this point, right? So we're going to take a look on the 1-hour time frame. And looking at the 1-hour time frame, we're obviously moving bullish. We have a huge rejection from the top side, and we need to identify whether this huge rejection, it means price is going to continue down, or is it going to start ranging? That's what we need to identify at this point. So let's take a look on the 4-hour. We're coming down. Looking at the 1-hour time frame, we're creating a resistance. Looking at the 30-minute time frame, oh, we're breaking the low over here on the 30-minute time frame. So we need to see if price is going to come down. We need to see some sort of a support forming, right, for price to really come down. So I guess we'll have to wait over here. So we took one trade. It was a buy position. Price moved up, went pretty good. So at this point, I mean, if it starts ranging, it is what it is. Let's take a look on the 1-hour time frame. So there's no trade to take at this point over here. Now you can see how the candle bodies are getting smaller here, right? You look right over here. You look here. This was a big candle body. This is a smaller candle body. And now the candle bodies are getting smaller. So as the candle bodies they start to get smaller, the volume to go up becomes weaker, right? Because we need stronger candle bodies. So now these candle bodies are getting smaller. So taking buys over here, it becomes pretty risky, right? Because the volume is down. Because of that big rejection on 30-minute, if the next candle closes bearish, doesn't that mean we can retest support? Yes, that means we can retest support if we get some sort of a resistance formed over here. See this right over here? See what we're talking about? The candle bodies are getting smaller, you know? So as the candle bodies are getting smaller, now we're turning around. And as we're turning around, this means there's a high probability for price to continue down to kind of like retrace. Because even though we haven't created a support, but we've created a resistance. This is covered in the rejection sections of the database, you know, like rejections. I think that was done in the Market Fluidity webinar. Where we're creating rejections. We have a candle closing bearish at this point. So there's a very high probability for the next candle to kind of like continue down here from this point. So that's something we can take a look at for price to continue down. Am I going to take a sell? Maybe, yeah, let's take like a 0.25% sell just for like learning purposes, right? So stop is going to be around, what's this? Oh, actually, this is pretty big over here. It's like a So is this like a 10 pip stop? No, it's like a pretty big stop over here. 39. Yeah, is it 100? Let's take a look over here. Oh no, my bad. Okay, let's just close this. This is less than 100. This is around, okay, 10 pip stop over here. It's like a 15. Yeah, so this is for learning purposes right over here. Oh, well, my bad. That didn't work out too well. All right, we're still in the game though. So we're not gonna make any sudden movements for gold. Man, that went really quick. Price just shot up and stopped us out. If possible in the future, can you add a tutorial video on using the simulator to database? If you continue to use simulator in the future, it will be really helpful for newbies like me to get into the rhythm. Yes, 100%. So I'm probably going to do that next week sometime. Yeah, next week sometime I'm going to add a tutorial video over here. So yeah, let's take a look over here. Yeah, this is just very choppy here now. So I think it's a good idea to kind of like stay away. Probably going to stay away. But now we're creating this resistance on the 1 hour time frame right over here too. Right, so now since we're creating resistance on the 1 hour time frame, there's a high probability for it to continue down. Now, see, the previous resistance was created on the 30-minute time frame, right? So 30-minute time frame, I guess, based on the 4 hour, it was a little bit weaker. So now since we're getting it on the 1 hour time frame, it's a little stronger, but we're not going to take a trade because we had a winning trade and we had a losing trade. So now we're going to call it a day at this point. How you restart from a losing week? You just start a new day as like a new day. Like if you had a losing week, you start Monday as like a new day, a brand new day, to see if you can get a profitable trade or not. So we can see here how this resistance was a much stronger confirmation, just like we mentioned here, much stronger resistance rather than a 30-minute, right? And we can see on the 1 hour it just continued down over here in like 40-50 pip range over here. Pretty neat. So slowly we're moving into NY Open. It's a Thursday over here, so yeah, probably. I don't know. Let's move towards the next New York session over here, which is going to be the last New York session. Oh, we got some Russian over here. So if someone cannot reproduce this on a simulator, should they wait to get on the live charts? It's not about reproducing on the simulator. It's about this. Now these things, they may happen like every 3 weeks, like because like every trade we took in this simulator was a different setup, right? And those different setups, they may happen multiple times over the next 6 months. So you're going to need practice to kind of like looking at the charts every day for the next 5 to 6 months to see if a certain scenario is going to happen over and over and over and over again. Because the trade we took based on a fake out right over here, so this was a fake out right over here, right? And price broke support, came up back into the range, took a buy for price to continue moving up. This may happen once a week. So if you haven't seen it happen in a live market, you may have to wait maybe 2 months, 3 months to kind of like train your eyes to see if it, then after maybe 2, 3 months, you're going to say, oh, hey, like, you know what? I've seen this fake out happen multiple times because you spent 2, 3 months watching this happen multiple times. So it takes time. It actually takes time for things to happen. Is 30-minute your still favorite setup? Yes. 30-minute on pound yen, I always go with that, no problem at all. But over here, you can see how the rejection was made on the 1 hour time frame, and we had a clean move down over here to previous support, just as we mentioned. It didn't really work on the 30-minute because I guess the 30-minute was a weaker confirmation, and I guess if you want to kind of like break it down more, maybe once we broke below this low was when there was an impulse entry, but on the 1 hour time frame, we had better confirmations here. So let's move on to the last session over here. It's going to be for the Friday. Oh wow, oh damn, this thing moved up quick. Gold, damn, Daniel. All right, so let's move on over here. 6, 7, 8. All right, perfect. So this is the last trade we're going to take here for the session. This is the pre-London over here, 2 hours 2 hours before the London Open. Let's take a look on the weekly. Weekly still moving bullish. So look how many trades we took on the weekly candle, right? We took 1, 2, 3, 4, 5 trades on the one weekly candle. Pretty cool to see over there. Looking at the daily time frame, we can see how many trades we took on the daily candles over here, as price moved up, pretty amazing. Looking on the 4-hour time frame, okay, so now we are in a predicament. Now we need to identify whether this 4-hour candle is going to continue moving bullish, or are we going to start retracing, or what's going to happen over here. So that's something we have to identify here now. All right, so let's take a look on the daily. Daily so far is moving bullish. There's no doubt about that. Now we need to take a look on the 4-hour time frame. And looking at the 4-hour, we can also see how the 4-hour candles are slowly moving up from this point right now. And if we're moving bullish, I think there's a very high probability for the next 4-hour candle to kind of like retest this high right over here. That's something we can anticipate for price to do at this time, for price to retest the high. Now, when we look on the smaller time frame, let's say we look on the 1-hour time frame, we can see that price is ranging over here. We have the support forming, and we also have this resistance forming. So on Friday, if price starts ranging, we can't really do anything about it. So let's see here. No news, no news. We have a clean day, no USD news here as well. Perfect. So let's go back to the 4-hour here now. All right, so now, yeah, I guess now we're stuck in this predicament over here to see whether we're going to continue moving up or are we going to continue moving down. But I still think there could be a buying opportunities here. So let's speed this. Let's speed this low over here, looking at the 1-hour time frame. The only thing we need to see here is that if we break below this low, there's a probability we can continue down to fill this wick and then continue down to fill this wick over here as well. But if we break above this high, then we can continue up to fill this range. So see how the buying probability is much stronger because there's a clean candle here to the left hand side. But the selling probability is weaker because we have this wick rejection and then we have another wick rejection way down over here and way down over here. So we'll have to wait for price to break above this area 1889 to kind of like anticipate if price is going to continue moving up or not. So that's where our entire weight is going to go into. So we're going to speed it up here a little bit. Oh, 30-minute candle is closing. 30-minute candle has closed. It's closing at support. We can see right over here we have a support on the 30-minute time frame. And now at this point we really need the candle to close below support to take a sell. Because see, in the first 6 seconds it's closing below support. Well, it's breaking support. So we need a confirmation before we can take a sell. Because we don't know whether it's coming down to create a lower wick to go back up in the range or what it's trying to do. So we actually have to wait. But if it closes back in the range, then there's no sell. Yeah, see the 15-minute candle has also closed. If you look at the time here, 15-minute candle also closed, and now I guess the 30-minute candle is going to close back in the range, it seems like. Yep, we were right. It's closing back in the range. Someone could argue we can continue moving up in this range, but for the sake of simplicity and for the sake of explanation, we're waiting for price to either break below support or we're waiting for price to break above the resistance. And I think this is going to be a pretty good waiting period over here to see if we break above this area or not. All right, so slowly we're coming up over here to resistance, closer to London Open. And I guess if we can break above that resistance with London Open, then I guess we can continue moving bullish because the candles are printing bullish at this time. So once the 4-hour candle flips, can we say it would be harder for it to change direction? Yes. Yes, exactly. So if we look on the 4-hour right over here, what we can see is that this is our resistance here, right over here on the smaller time frame. And if the 4-hour candle breaks above the high over here, that means the 1-hour candle is breaking resistance. That also means the 30-minute candle is also breaking resistance. And we're moving into London Open, which is a higher volume time. So that means there's a very, very high probability we can continue up to fill this range in this 44 pip range over there. So that's something we're waiting for at this point. Still got about 20 simulation minutes left. Oh, looks like we're rejecting. Interesting. We got 7 minutes, 5 minutes. Oh, we're breaking up slowly. Candle has closed bullish. This is the London Open. I guess if we can start breaking above this highs, that's also going to be a break above the 4-hour highs, and then we can take an impulse entry for price to continue bullish. Oh, there we go. We're breaking above those highs. We look at the 4-hour. We're breaking above those highs over here. So this is an excellent position to take a buy and having stops below this previous candle over here around, I think it's going to be 40 pips over here, 40 pips, and our target is around 54, 55 pips, right? Because we got clean candles here to the left hand side. So it's going to be, so we're going to use a 0.5% risk since it's a Friday. And yeah, I think it should continue moving bullish at this point. So this will be an impulse entry. Yes, it's an impulse entry over here. Beautiful. So this is based on the 4-hour. So we're actually going to let the 30-minute candles to close, the 1-hour candles to close. So we're about 41 pips, 42 pips. We're going to close partial positions, close 80%, and let the rest run at break even over here. So see, so this was a very, very simple setup. We broke above the highs. We also broke above the 4-hour candle, anticipating it to continue moving bullish. And I mean, it just rocked solid over here. Now we're going to continue up to this resistance. We're going to close more partials, and then we're going to leave the rest running. So during this whole simulation, our stops were pretty wide because we took trades on the 4-hour time frame, right? But our destinations were also relative to our stop losses too. Also remember, this is a simulation, so it's actually taking real-time hours, right? This is like two 30-minute candles. This is like two 1-hour candles. So you're actually watching and waiting for the candles to form. We're not looking at the 15-minute time frame. Look at this 15-minute candle right over here. Look at how it formed. Went up, came down, boom, boom, like, you know, all this mess over here. So you're not looking at the small time frame. You're looking at the 30-minute time frame, looking at the 1-hour time frame, and you're really trusting the higher time frames to form. You know, only if you're trading based on the 4-hour time frames or like, you know, the daily time frames or whatever. So we're reaching that resistance. We're going to close another partial over here. Well, we got nothing left to close. We got only like 0.1% running over here. I like that because overall trend was bullish, more clarity, definite more clarity on high time frame. Can you use the same analysis on low time frame? Yes. Yes, these candles, they move the same way on all time frames. 30-minute time frame, 15-minute time frame. If you look at our other simulation sessions, you're going to see that these same situations happen on a 30-minute, 15-minute, and 1 hour, right? So these simulations, now the last one we did was on a higher time frame. This is also on a higher time frame, just to show that those same scenarios, they happen on all time frames. So with gold, 4-hour time frame, is it sometimes to trade within the range because there's so many pips? Yes. With gold, we have to get used to those retracements. Yes. You know, so trading gold, it requires a lot of practice. A lot of practice, because, you know, gold has a lot of deep retracements. You have to really wait for price to come to your levels. So, you know, gold is difficult in that aspect. So yeah, man, so we're slowly moving into, like, you know, a new 4-hour candle at this point. We look at the previous 4-hour candle, it's pretty bullish. We're bullish over here, basically looking at the 1-hour time frame. We did a deep retracement here. I mean, if we break above these highs, we go up. If we reject this resistance, we come down and our position gets stopped out at break even. So, or it's actually 10 a.m. over here. Oh, nice. We've been at it for a very long time here today. Let's see what happens in the next few hours over here. Oh, we got stopped out. And oh, nice. We continue moving up over here with the New York session. Nice, beautiful, nice move. Okay, awesome, everybody. I'm gonna head off over here. Need to shoot off. Yeah, I need to shoot off too with gold shooting off. So I'm gonna head off over here. This session is gonna be. It was obviously recorded. It's going to be in the database in about 3 or 4 hours. We're going to wait for it to render. Thank you all for joining in. Hope everyone has a great weekend, and we will see you guys Monday. Oh, and 21st February. Yeah, we have that risk management webinar too. So that's going to be pretty good too. That's going to be a virtual class. So, all right, take care, everyone. Have a great day.